This is Dr. Duru from Ahan Analytics. Well, this was a week where market breadth finally made a clean breakout thanks to the continued recovery from the AI crash and some other contributions from small caps. Now, the performance this week wasn't even. The technology stocks were doing relatively well, but the Nasdaq still hasn't made a new all-time high. And we actually had some of the AI-related stocks, particularly in semiconductors, get stopped at key resistance. And I'll take a look at that, of course, in the coming charts. Had some important economic news. Inflation, the CPI, the Consumer Price Index, basically came in around expectations. That also took rate hikes off the board. In fact, the odds of a rate hike in September went down even further. I used that opportunity today to go ahead and close out my prediction markets bet on that. I don't feel the need to prove myself 100% correct. I'm good at, I think it was about 70%, a little over, 78%. I can't quite remember. Odds of rates staying the same, that's good enough for me. No need for me to push it to 100. Anyway, the other very important economic news was retail sales on Friday came in much weaker than expected. Overall, of course, I don't think the stock market cares about that, but a few retail stocks it will matter for. I didn't see any particularly strong reactions in retail stocks to that news, but I do see things kind of capping out on a few plays and retail names that I am in. So I'm really on pins and needles for next week. I might be having to take profits in some of those, and some of those like Best Buy, I'll just have to give up on because I bought call options that don't seem like they're going to work out. Anyway, as always, I'm going to take you through the indices, the market breadth, and show you just how this breakout is forming out. And just note that the market where it is right now is exceeding pretty much all my expectations for the entire year. So while I'm bullish now, cautiously bullish, I am wary about the next pullback and sell-off, but I don't know what that exact catalyst would be, given we're in this place where the stock market doesn't really care much about anything. I mean, the bond market, the interest rates continue to go higher, they continually trend higher, and the stock market's trending higher. That is just not supposed to happen. All right, let's go ahead and take a look at those charts, starting with market breadth. All right, this is my favorite technical indicator, the percentage of stocks trading above the 50-day moving averages, what I like to call AT50. Very simple, big time breakout. I love it. It reinforces the bullish positioning of the market. So that's the breakout. You can see it's the highest point since around, let's call it late April. And as just a reminder, the only thing I'd be cautious about is once it starts to approach the overbought threshold of 70%, but we'll take things one day at a time. All right, the percentage of stocks trading above the 200-day moving averages that I like to call AT20, AT200. Hopefully this breakout is even clearer than the last one for AT50. You can see up here, it's higher than it's been since February. So I'm really liking that a lot. So that's the breakout here, and it was last that high back there in March. All right, let's take a look at the indices, starting with S&P 500. The S&P 500 is in all-time high territory. Yeah, it fell backwards, fraction of a percent, 0.2%, but still you can see now a new uptrend is underway. So sorry, let me put the arrow there. You can see it is on its way. Now, I don't like these kinds of uptrends because it's just kind of trading out here in limbo land. At any time, I could see, the index just dropping because of some catalyst right down to 20-day moving average support. But of course, that still wouldn't end the bullish pattern here. I would just be looking for, actually, look at that. It converges right with the former all-time high there. So S&P 500 looking good and bullish. All-time highs this week. Nasdaq, still not quite at its all-time high. Hopefully that's very clear. Obviously, it bounced, it went straight up after its breakout from the old downtrend, but it just kind of compressed and churned right in this area here. So I'm looking to see whether the tech stocks can get a little stronger and get up to their all-time high as a group, through the index. IWM, the ETF of small caps, leading the way straight up for, about 2 weeks. Sorry, I shouldn't say straight up, but it's been falling right along the upper Bollinger Band. I tried to get into my weekly calls and I slipped up. I lowballed my limit buy and just missed the trade. I'm hoping I still have a chance to get in at a decent price on Monday, but we will see. Small caps obviously very strong. All right, let's take a look at what happened in the land of AI trades. CoreWeave was one of the biggest news items. Ticker symbol CRWV. It gapped higher 19.3% on earnings. That's right here. But as you can see, yes, that's great. And yes, it's a bullish breakout above the 200-day moving average, which is that blue line, and a breakout above the 50-day moving average, which is the red line. But overall, CoreWeave is just stuck in a big trading range, right? So yes, it's good on a very daily or weekly basis, but overall, for the stock overall, it's really kind of a nothing burger. It needs to have a big breakout in order for it to be meaningful. Micron Technology, ticker symbol MU, at the center of the memory trade, of course, and this is the big development. MU made a small 50-day moving average breakout, gained 2.3%. It continues to recover from the big AI crash. Again, remember that was on July 29th, thanks to situational awareness. Amazingly, and this is how big the moves are up and down on these AI trades, particularly in the semiconductor space. Micron was as low as 739, so basically got cut in half from its all-time high. Wait, not quite cut in half, maybe about 40%. And then now from 739 to it's almost getting back to 1,000. What is that, about a third? Maybe about 25 to 30% gain. Again, I'm just doing this really rough in my brain. You can pull out your calculator if you want. The main point is big time moves, both up and down. Great trading stock if that's what you want to do. I haven't really developed a trading methodology for these except for to play the ETF DRAM, DRAM. Okay, Workday on the software side. Great news on the software side. Workday on Thursday soared 17.8%. I think it was as high as 25% on the day. You can see it got up as high as $227. And the news there was that Silver Lake rumors that Silver Lake wants to buy out the company. It's very notable that, this big fade was followed by another big move down on Friday, 3.8%. I went ahead and bought a few shares just in case that the rumors do end up being true, because I can imagine if Workday is a takeout target, they're going to want to be taken out for at least, let's just say, well, maybe at the high 227, but they're going to want to at least get back to a decent level from 2025, let's say 250 maybe. So we'll see. I think it's worth the risk. As you all know, if you've been following me, I always thought that the sell-off in software stocks this year was well overdone, and this was an opportunity to ride it. Unfortunately, Workday was not one of my high conviction picks, so I didn't have an existing position. I've been trading in and out of it, and of course, now I'm looking back saying, gosh, I really should have done the what I call the Peros analysis to see whether it should be a high conviction pick. But it is what it is. Now, Workday's news ended up helping to boost IGV, which is the ETF of small cap of software companies. IGV on Thursday soared 3.1%, but it's still at a very critical level. What is that critical level? Well, in June, remember, the software stocks as a group went parabolic, in May, and then they capped out in a big cataclysmic move on June 1st. And so I'm looking, you could see this is very suspicious, right? It pulled back right underneath that resistance. If it could break above that resistance, there's still a lot of resistance that will be left from the former all-time high, but it would still be a big, big, big development for software stocks in general. So that's what I'll be looking at for the next week or two. All right, let's move on to some more a more mundane stock, Aramark. I looked really quickly at the earnings report for Aramark. It jumped to a new all-time high, gained 8.5%. And it's funny, even Aramark, which is focused on food service for work sites and that kind of stuff, even that is becoming an AI play, as they are serving, guess what? Construction sites and staff at data centers. I had it on my buy list for the week after that earnings, but as you can see, let me just zoom in here, it is still way overheated and overextended. It never once even got below the upper Bollinger Band, which is that black line that defines the expected price volatility around the 20-day moving average, around 95% of the price action. But still, it's on my buy list. I just need a decent pullback so I can get a good risk reward entry. I talked about Rapid7, and one of those cybersecurity software stocks. I didn't understand why it was doing so poorly for so long. This is just a reminder of how bad the downtrend has been. It got as high as 146 or so back in 2021 and got down to single digits as low as $5. I drew this box out. I bought this breakout from the box, and I held the stock during earnings and thought I was a genius, but the stock got, let me just zoom in here. You can see it got well overextended to $14.83. It pulled back to, still a decent 15.3% gain, but unfortunately this continued selling the next day forced me out of the stock because I didn't want to have to watch all of the post-earning gains evaporate. They did at the intraday level, but the stock did bounce back and now it's rebounding, but I'm good. This was a very good trade. I followed the technicals to a T. You could see this perfect, picture perfect bounce right here off of the 50-day moving average. So it was ended up being a very profitable trade. And I already have enough cybersecurity stocks. Well, actually, you can never get enough protection, right? But I have some decent positions. So if RPD does continue to move higher, I'm not going to complain. And then, I'll just look for a new entry position on the next pullback. Now, I am kind of missing Red Robin Gourmet Burgers, ticker symbol RRGB, because I'll show you what happened to me. I put in a tight stop, and I think I literally got stopped out right here at the very bottom of that day. And RRG and Red Robin has just gone straight up ever since that point, as if they were specifically targeting me. So I didn't want to get out, but I had to stick to my rules, and I got stopped out, and I just watched it just march higher. And then earnings came, and you could see the market loved it, 21% gain, and the stock continues to move higher. So this stock, maybe the restaurant business in general, is in true recovery mode. In fact, I would argue it's pretty much recovered at this point because it's at $10 per share. So good for Red Robin, happy for them. Just really quickly, SMH, which is the VanEck Semiconductor ETF. You can see this is the resistance I was talking about. Yes, Micron nudged a little bit higher off above the 50-day moving average, but the ETF of semiconductors stopped cold right at the 50-day moving average resistance. So that's also going to be on my radar list coming up. And why did it stop cold there? Because we had stocks like Applied Materials, ticker symbol AMAT. It traded right under its 50-day moving average for almost 2 weeks, and then bam, on earnings, it dropped 5.1%. So AMAT continues to be in bearish position. We also had Cerebras. I never quite know how to pronounce it, but it's ticker symbol CBRS. It was looking good. I was telling a friend of mine that it looks like Cerebras has bottomed. In fact, let me just draw a quick box around the bottoming pattern. Boy, this is kind of arbitrary, but I'm going to draw it right around here. And you can see conveniently how the stock gapped higher here. And then that was right before earnings. It gapped up 11.6% gain on that day, but then post earnings, it dropped 11.8%, more than wiped out those earnings. And as you can see on Friday, it pulled back some more, 5.2%. So that helped to hold back SMH. ANET, or Arista Networks, ticker symbol ANET. This is one I talked about, a decent setup, and was looking good until Thursday and Friday. It's pulled back. I was really hoping it would continue to push past what is now natural resistance at the intraday high post earnings. I may have to just lock in what remaining profits I have on this trade. We have Fresh, ticker symbol, Fresh Network, Freshworks, ticker symbol FRSH. This is just very simple. I've been in this for a while, particularly after the CEO bought 125,000 shares. This has just been marching higher. I was glad it survived earnings. It did pull back after earnings, but it held that 20-day moving average support very well. It's that dashed line. So I'm happy to continue to sit in that one. I haven't covered Fastenal, ticker symbol FAST, in a while, but it has played out just as I had hoped. It's now at new all-time highs. This is a reminder. I decided to finally commit to this stock for the long term. This is the long-term chart that I've been looking at. Year after year, decade after decade, it's just been going up. And last week it hit new all-time highs, even though it did pull back particularly on Thursday and Friday, but I'm going to continue to sit in there. Abercrombie & Fitch. Now, this is where I'm a little nervous because of the weaker than expected retail sales. You can see Abercrombie & Fitch came off sharply off its highs for the week. but it's been a great trade. I think when I wrote about it, I was playing the breakout on 200-day moving average, and I've just been holding on ever since. Even if it pulls back some more, I'll next watch to see and hope for a bounce off 20-day moving average. Otherwise, I'll have to get out before earnings come up. In fact, I don't even know whether I'm going to hold on to the stock through earnings no matter what. All right, big disappointment of the week was SoundThinking, ticker symbol SSTI. Plain and simple, crashed 25% post earnings on Friday. It is now at, it's not quite at all-time low, but it's testing its lows from 2025. Very disappointing because I thought right here it was making, it was confirming a 200-day moving average breakout here, and also confirming a bottom from the selling earlier in the year. That turned out not to be the case, and now this stock is basically bearish, and I might have to just lock in my losses, take my losses, and just move on. Another stock that's very interesting to me is Copart, ticker symbol CPRT. Let me just show you the highlights. This is the 50-day moving average breakout after a big surge last month. I didn't see any news to explain it. And then the stock kind of consolidated, held this 20-day moving average support, and then soared on Friday, 7.6%. Again, no news, but I love this high trading volume. Now, interestingly, I looked at the options, and I think it was the December 27.5 puts had huge trading volume relative to open interest. So I think something could be up, as I like to say. So I went ahead and bought a put for that. It could just be hedging, and I bought a call option, I think expiring in September. September. So I'm hoping that whatever is coming up, the stock does make a big move, but this is very bullish. If the stock pulls back just a little bit, I will lean a bit on my hedge and start buying some shares because this is a very constructive chart right here. All right, speaking of constructive, we have Accenture, ticker symbol ACN. I thought I would put this stock away for good or maybe for a very long time, but it proceeded to recover all of its post-earnings losses here and has just continued to march higher. So I went ahead and bought some shares, I think right around in here on the confirmed 50-day moving average breakout. I hope this latest Accenture trade actually finally works out and that I don't have to reverse myself and take a loss. All right, for solar, ticker symbol FSLR. This stock has just been all over the place. The latest big news was this tariff and minimum import prices on polysilicon derivatives. But you can see here that First Solar faded and has been selling off ever since. So the tariff news wasn't enough to really keep the stock upheld. I'm still holding on to my shares. You know, I got tricked, as I mentioned earlier, on this breakout to a new all-time high. But, you know, I had accumulated stock on the way up, so my basis is pretty decent. And now I'm almost back. I was almost back to flat, but not anymore. But I'm going to hold on to it because I'm bullish on the solar sector for the viable companies anyway. And then finally, we have Hormel picking up the rear, ticker symbol HRL. I'm only putting this one out because it's a stock that I talked about earlier as a high dividend play. I thought it would continue to go higher, but it now looks stalled out suspiciously right at resistance, what I'm going to call resistance from around the 2026 or this year's highs. You can see that there. So very suspicious with this breakdown. I'm worried that the stock has basically flattened out and stalled out, which means that it'll just be me sitting on it collecting dividends as long as the stock doesn't have a new breakdown below 200-day moving average. All right. Thanks a lot, everyone, for checking this out. This is Dr. Duru from Ahan Analytics with the Market Breadth. As always, put your comments and feedback down below. Always happy to get those. Share and like the content so the algorithm knows what's up. And finally, if you want more content like this, just go ahead and hit the subscribe button and you will be notified. All right. Take it easy. Have a good weekend, everybody. And I'll see you the next time.